This week, markets navigated a swirl of macroeconomic signals and corporate developments. On Tuesday, August 12th, US stocks surged to record highs. The S&P 500 rose 1.1% to close at 6,445.76. The Dow added 1.1% to 44,458.61. And the Nasdaq jumped 1.4% to 21,681.90, with the Russell 2000 climbing 3% as a softer-than-expected July inflation report. Midweek, markets remained modestly positive on Thursday, August 14th, despite inflation exceeding estimates and dampening rate cut expectations. Gains by major tech firms, including Amazon, helped keep the S&P flat, and small caps continued their positive weekly run. Policy developments added further fuel. U.S. Treasury Secretary Scott Bessent called for a half-point Fed rate cut in September, prompting markets to rally on easing hopes. Wall Street's bullishness intensified as major banks raised their year-end targets for the S&P 500 to a range of 6,600 to 7,100. Buoyed by strong tech earnings and AI momentum, though some analysts caution that sentiment may be outpacing economic fundamentals. Meanwhile, Morgan Stanley flagged risks that could disrupt the rally: a cooling labor market, narrow earnings leadership concentrated in the Magnificent Seven, and renewed stagflation concerns due to tariffs. Corporate news drove sector-specific moves. Amazon's expanded grocery delivery footprint boosted its shares, while CoreWeave fell on widening losses, an IPO lockup expiration. Ford unveiled a new EV platform, and bullish a crypto IPO, and Life 360 both saw strong trading action. Global markets responded dynamically to trade policy news. President Trump's announcement of semiconductor and steel tariffs, including potential U.S. government support for Intel, spurred an 8.9% rally in Intel shares, even as Chinese industrial growth slowed and FTSE 100 reached new intraday highs. In summary, this week closed on a broadly positive note. Major indices posted weekly gains, with small caps leading amid optimism for Fed easing and continued strength in tech and AI, although macroeconomic risks linger in the background.